What's up, everybody? Michael and Coco here. To do some technical analysis on the S&P 500, we're going to be looking at the daily time frame and the 30-minute time frame. Let's get into it. All right, welcome to the daily time frame. Before I get into it, I just want to say thank you for all the birthday wishes. It made me feel very special and I greatly appreciate it. So what do we got going on in the stock market today? Well, we're over here looking at the S&P 500 Index, the SPX, and what do you know? We broke down through this trend line. However, we closed slightly back into it. So we had a gap down, and guess what? People bought the dip and we ran it up pretty much throughout the rest of the day to close on almost the all-time record high within a few inches to create a new record close. Overall, the S&P 500 closed $10 higher, almost a half a percentage point up for the day, even despite the jobless claims news. As you can see here, the initial claims for unemployment insurance did tick up this week to 1.1 million. CNBC reported that the jobless claims report may be a warning to Congress that we need additional stimulus. Now, we talked about that in yesterday's video, and as we all know, tomorrow is OPEX, which could very well send this market higher, and then we're going to be moving into the weekend where it's very possible that Congress might release data on the stimulus plan. Let's go ahead and head back to the chart. All right, so we are here, and clearly we had this gap down, broke the trend line, and then pushed higher throughout the day. So this is something to monitor. This could be an early sign that this is breaking to the downside. I still believe that the VIX is going to want to fill that gap, which we'll go over here very shortly. And something to pay attention to as well, the VAPI indicator that we've been following as well is still slowly ticking down towards that zero range. Now, this does not necessarily mean that this market is going to crash and pull down, but if it did, a good zone to keep an eye on, what we've been mentioning is that 3,200 to around 3,000. So this zone within here would be my idea for a pullback and then potentially move higher from that point. But we need to see what takes place next week and through September, November to really understand where this market wants to head. Overall, today was a very strong day, especially when you get this kind of gap down where it starts off very bearish, but yet the bulls really step up. So we'll see more about that on the 30-minute time frame. Let me go ahead and pull up the VIX right now. Here is the VIX chart, and as you can see down here, we had the breakout above it, but it was what we mentioned kind of yesterday where we said we could be potentially a false breakout. Well, we had a gap up and then a push lower to the downside. Now, if you look at the previous falling wedge pattern, it actually did this somewhat similar of a thing, same thing where it moved up high up here and then pushed all the way down to retest. Now, me personally, I still think that this down right here, the market is going to want to come fill that gap at 18. So will we see the VIX maybe move around here, maybe back test, or will we see it maybe trend around here down to this area eventually and then see the continuation to that target of 45, 40 range? Well, we're going to just need to monitor this day by day to look for any potential warning signs that we're going to see a move to the upside in the VIX chart. All right, so we are here on the 30-minute time frame. This blue vertical line going down the screen right here represents August 20th, where the day started, and then every candle after that represents 30 minutes of data. The other lines on the screen, these red lines, are areas of resistance that we mapped out yesterday, and then the green ones are areas of support that we mapped out yesterday as well. So what took place? Well, big gap down and a push lower to about 33.54, and then since that point, a huge push to the upside right here to 33.70, closing above it. So both these areas of support, like I said, it kind of acts as a web. It held up in this range, completely this range, but it came as low as 33.50. So what I want to go ahead and do is remove this 33.63 support right here because it may or may not come into play tomorrow, but we'll redo all of our support and resistance here soon. Now, when we did get a close above it, this 33.70 area did end up acting as support again with this 30-minute candle and about these two right here. So for about an hour and a half before moving more to the upside, we had it come back down to test this range as 33.70. So we're going to have to watch that area here pretty closely, potentially heading into tomorrow. But after from that point, we really just saw a strong move to the upside. This 33.80 level did act as an area of resistance that we planned out. But we didn't really get a full pullback down to this 33.70. It just pulled back a little bit and then moved higher, broke above it where we saw a big breakout. And then the next area of resistance was at 33.87. And clearly that did hold. Today, you can see these two upper wicks did get above it, but we could not get a close above those levels. So overall, it started off very bearish with the gap down and a lot of downwards pressure, but the bulls really did step up. Now, in the last hour of trading, this is somewhat of a cause for concern. We have the long upper wicks right here, right around that purple trend line for the rising wedge. So this could have been a breakdown and now a retest where we potentially see the market move back down. Or tomorrow is Friday, options expire, we have OPEX, we might very well see it pull back in or move up along this trend line as well. We're going to have to see where the stock market opens up tomorrow to really determine where we're headed next. So let's go ahead and map out some resistance and supports for tomorrow's trading session. First area is going to be 3,400. We're going to keep that there as a level of resistance. It's a psychological level and it acted as resistance right through here. The next area of resistance to keep an eye on is going to be right here where this last 30-minute candle tapped into, and that's 33.90. Now, it's not just because of this one candle that acted as resistance, but clearly it acted as resistance right here on these two candles. And then these ones acted as support. Right here it acted as support, and then it acted as somewhat resistance around here too. So 33.90 does look like an area that will be coming into play tomorrow. Now, I don't know if the market's just going to gap above it and maybe retest and then maybe move higher, or if it's going to try to get above it and then get rejected. We will see. It really ultimately depends, like I said, where the market opens up. Now it's time to map out some areas of support. First area of support that I want to go ahead and mark out is going to be right here at 33.81. Now, you could call it 33.80. That's completely fine. It's pretty similar to where we had it yesterday, but I'm just going to move it up just a tad bit. And the reason why is because this candle right here, wick touched down perfectly on it. And then these two candles acted as resistance perfectly on it. And then we had some support taps right here at 33.81 too as well. So a lot of data points right there. It looks like this will potentially come into play tomorrow as well. The next level of support to keep an eye on, I'm going to go ahead and move this up just a tad bit more to right here at 33.76, you can call it. And the reason why there is simply because it acted as resistance through this portion and then support right through here. We have 33.70 as well. That can be an area of support. So let's go ahead and just mark that now, because there seems to be quite a bit of different areas that we should be keeping some sort of an eye on here in the near future. 33.63 looks like a good level. So we have quite a few areas of support and resistance. I like to keep my chart real clean, so we're gonna have to remove just a few of these just to make it a little bit simpler on the eyes. I'm gonna go ahead and actually remove the 33.63, but it is still a number to keep an eye on. Even down here at 33.54 is a number, because that's where the pullback was and bulls really did step up from that point. Only draw those out on your chart if tomorrow the price is going to be coming around those areas. But for right now, I'm going to go ahead and remove that, and we're going to just hold these areas as of right now. We got 33.70, 33.75, and 33.81. And then our two areas of resistance is 33.90 and 3400. Now, yesterday, if you remember, we were talking about this did look scary and the breakdown did look scary. But when you zoom out, I wanted you to pay attention to the overall context of this 30-minute chart as well as the daily, that we've been making still higher lows. So we have not seen somewhat of a trend change. We have a low high there, here, we had it here. And then it looks like right here is another one. Now we marked it up a little bit more, but this price did come down and it's clearly around this area too. But as you can see still, we have highs jumping up and taking place. Until that trend changes, that would be more of a cause for concern that the price can start heading down to that 3,200 level, which we've been talking about. And that's kind of the price target, 3,000 to 3,200, if we start seeing volatility pick up in the VIX. All right, everybody, that's all I have for you on today's S&P 500 technical analysis update. Coco, say bye, and thanks again for all the birthday wishes. Have a good night.